Good morning, ladies and gentlemen. Good day, and welcome to the Q3 FY24 earnings conference call of Rites Ltd, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phones. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Aditya. Good morning, everyone. On behalf of Elara Securities, welcome you all for the Q3 FY24 and 9-month FY24 conference call of Rites Ltd. Take this opportunity to welcome management of Rites Ltd, represented by Shri Rahul Mittal, Chairman and Managing Director, A.K. Singh, Director Projects, Shri Deepak Tripathi, Director Technical, and Shri K.G. Agarwal, Director Finance. We will begin the call with a brief overview by the management, followed by Q&A session. I'll now hand over the call to Rahul sir for his opening remarks. Over to you, sir.
Morning, everyone. Let me begin with the safe harbor statement. The presentation and the press release, which we uploaded on our website yesterday, and all discussions during the call today may have some forward-looking statements. These statements consider the environment we see as of today and obviously carry a risk in terms of uncertainty, because of which the actual results could be different. And we do not undertake to update those statements periodically. So let us break down the Q3 numbers. If you compare YOY, the revenue has been flat. Profits have dipped by about 18 crores, and the hit has been by the two identified areas, about 25 crores from the export stream of revenue and about 8 crores from the inspection stream of revenue, which, as you are aware, is the changed goalpost now. So these 33 crores in line with our efforts and push to maximize the project consultancy stream of revenue to minimize the impact of these two streams. The YOY, the project consultancy revenue, saw a growth of 21%. And what we are happy is that the challenges and the strategy that we identified at the beginning of this FY to counter these two impacts to the maximum and minimize their impact have seen a steady growth sequentially in line with our strategy. And if you compare sequentially, all the areas, whether revenue Q2 to Q3 has gone up by about 20%, EBITDA has gone up by 30%, PAT has gone up, margins have gone up by about 2%, and project consultancy continues to grow, so sequentially also it has grown by 5%. So this is in line with our direction, consolidating our position in this FY. And the biggest, the happiest moment for us was when we got our the first export order after a gap of 4 years. So that also now will start generating revenue. And finally, we can be proud to say that we are now a one order a day company. In quarter 3, we got 100 plus orders totaling to 600 plus crores. So our immediate target of being a one order a day company is now in place. And with this, I think consolidating our position moving forward will only see further improvement sequentially also. So with these opening comments, I leave the floor open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephones. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, please limit your question to 1 per participant. Should have a follow-up question, we request you to rejoin the queue. Our first question is from the line of Yash Gupta from Thingside Advisor. Please go ahead.
Good morning, everyone. Sir, my question is on the consultancy margin. In the last 4-5 quarters, we have seen a volatility in the margin. In this quarter also, we saw a dip in the consultancy margin. What's your outlook for next financial year FY25?
Yes, morning, Yash. You see, consultancy, all the streams of revenue contributing to the consultancy revenue, including the inspection revenue, with more and more, all of them opening up to competitive bidding and we aggressively bidding and getting orders. As I mentioned at the outset, as I said, more than 100 plus orders we've got in this quarter. Yes, definitely margins will continue to be difficult to maintain at the historical levels, even within the consultancy stream, and also overall the EBITDA margins, including the, in each of these sectors. So while these margins will continue to be difficult, as I said, to secure at the historical levels, but yes, considering that we are now getting more and more orders and increasing our order book, as you see, our consultancy order book has also seen a healthy growth. Our aim will be to maximize the orders in the consultancy wing, continue with their effective execution, so that you see actual growth in EBITDA and profit while securing margins to an appreciable level.
So we can say that consistency margin will be around to be 22 to 25 level or below 42%.
You see, overall, we have a blended mix of revenue, and our aim will be that overall, our EBITDA margins we'll be aiming for anything above 20% plus.
Okay, thank you, sir.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Viraj from Jupiter Financials. Please go ahead.
Yeah, good morning, sir.
Morning, Viraj.
Yeah, sir, my question is, we've seen a dip in international consultancy. What is the reason for that?
You see, international consultancy, I agree, Viraj, that the revenue realization of international consultancy has been slightly low in this quarter. However, orders have started flowing in, and the way we have bid across a number of geographies in international consultancy, I'm sure that they will start generating revenue maybe about 2 quarters henceforth. So in the coming FY, you will see a growth both not only in the international consultancy contribution to the revenue, as well as I said at the outset, the export order, which has now we've got 300 crores, start generating revenue next year.
Okay. So I can join the queue back.
Thank you.
Thank you. Our next question is from the line of Shreyansh Mehta from Equirus. Please go ahead.
Thanks for the opportunity. So my question was pertaining to the export orders. So if you see, we've just converted partial of our L1 into the firm orders. So when can we see the larger pie coming or converting into revenues or even into firm orders?
No, you see, there were 2 different geographies. One was Mozambique, which is the locomotive order, which we've got it for 10 locomotives, and this should start. Locomotives are normally a longer lead area, so they, while we are hopeful of pushing them, but they will definitely start generating revenue by latter part of the FY. The second case was where we are L1 for about 200 coaches in about, this is amounting to 800 crores plus at Bangladesh. We are hopeful that should mature into a finite LOI soon in the coming weeks. And coaches, since take a lesser lead time, they, to my mind, will definitely start generating revenue quicker than the locomotives. But both combined, as of now, these are the 2 right away which are visible, should definitely start generating revenue in the coming FY. Besides this, we are pitching for a number of orders and bids for export across various geographies.
Sure. And sir, any clarity on the Zimbabwe order, the rolling stock?
It is still the agreement, as I mentioned last time, has been signed few months back. They are pursuing getting their funding in place. They are moving in the right direction. We are also closely in touch with them. They are getting the funding from the African Development Bank, and all the necessary paperwork is moving in the right direction. And I'm sure that it should mature into a formal, finite, committed agreement very soon.
Got it. I have a couple of more questions. I'll join back in the group. Thank you.
Thank you. Our next question is from the line of Vishal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Just one clarification. Last time in the call, you mentioned that the two orders, which is Bangladesh is upward of 1,500 and Mozambique is upward of 500. So just, clarification. So what I can understand, as per the release, Mozambique is roughly 300 crore that we have received, and Bangladesh is working out to be 900 odd crores. So is it remaining part yet to be, the tender are yet to come out, or this is firm, out of 1,500 for Bangladesh, we have got 900 and similarly for lower for Mozambique. Is that the right way to understand?
No. I think there's a slight, you can recheck the figures. What we had mentioned last time was that 1,500 is the total export orders if there's a visibility. Out of that, the one order has converted into a finite order and agreement, which is the Mozambique one. The Bangladesh one is in the final stages, where we were declared L1, which is totally ranging in about 800 to 900 crore, which should mature soon. So these are things which have immediate visibility. We had mentioned a total pie of the visibility in the range of about 1,500 crores.
Okay. So is it the pie still remains, or probably that's all that we get from the Bangladesh and Mozambique as of now?
So so that was including the order which was in hand. And that has already, we have now in quarter 3, if you see, we have exported 2 locomotives and 10 coaches, which has generated revenue. So now what we see, and if something more matures or become L1, we bid for a number of locations. We will definitely inform you. Yes, one portion of the pie, which was where we were declared L1, was the wagon order in Mozambique, which was approximately about 150 to about 175 to 200 crores. And that was the one where while we were declared L1, but at the stage of finalizing the order, they didn't give us the order for various reasons. So that to that extent, that out of 1,500, that amount has gone down.
Right. Maybe just one last thing. So these orders, they are in bill to us in USD. And is it forex and gain and loss that comes to our kitty, or how it works?
Yes, it comes to our kitty. So what the approximate figures in INR I'm quoting is approximately at the time of getting the order, but obviously the revenue realization happens at the time the revenue comes in USD.
Okay. Sure, sir. I'll come back in the queue. Thank you.
Thank you. Our next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah, so thank you for the opportunity again, sir. So with all these things coming online, what would be your guidance now, sir?
So you see, Viraj, our main goal at this FY was to, number one, come as close to FY 22-23. Number two, to get an export order, to increase our consultancy order book, have a growth in the project consultancy revenue, and continue bidding aggressively while securing our margins to the extent possible. So with all these, as you see at the outset that I mentioned, they are moving in the right direction. What we are aiming is that this FY we should come as close as possible to the last FY, and in the coming FY, these export orders will start generating revenue. These large number of consultancy orders that we are getting, these will start generating more revenue. And this push, as you see in the project consultancy revenue, which is happening sequentially also. With all this, our aim is that next FY, our baseline will be FY 22-23, not 23-24. And based on that baseline of 22-23, our aim will be to have a healthy double-digit growth in the EBITDA and profits.
Okay. Even the top line would grow at the same level or would be less than double digits?
Viraj, as I have been mentioning earlier in my various interactions, we are a EBITDA profit bottom line driven company, and we will aim at double-digit growth on the EBITDA and profit on a baseline of 22-23, rather than just focus on the top line without giving you enough growth in the bottom line. So the growth in top line will be governed by the strategy which is aiming to give you a healthy growth in the bottom line.
Okay. Actually, come in the queue. I'll give you a question. Thank you.
Thank you. Our next question is from the line of Rohit Natarajan on queue. Please go ahead.
Thank you for this opportunity. So I joined the call a bit late. Probably I must have missed it. But if you could just touch upon the over and above the current export pipeline, I mean, what numbers are we looking at to finalize in this year? Will it be how many countries if you're talking to? Can we make a ballpark state like maybe 4 countries, $100 million tickets? That will be really helpful, sir.
So you see, as you have been, if you've seen our figures for last 2-3 FYs, our biggest challenge has been a sinusoidal revenue contribution of the export stream of revenue, and that is primarily because about 2 years, more than 2-3 years, we did not get any orders, and more so it were 2 years of COVID and 1 year after recovery. These countries were recovering, the economies were recovering from the COVID impact. So now with the aggressive push that we've made for last 1 year, these have started generating results. As I mentioned, the first order after a gap of nearly 4 years, we've got of 300 crores. We are L1 in the Bangladesh order, which is about 850 to 900 crores, and these two are the ones which are seem to be right away there, which will generate revenue in the coming FY. Besides this, the opportunities are tremendous. We have bid for a number of tenders across geographies in Southeast Asia, in Africa, and aiming to penetrate the Latin American market also. So moving forward, we see a healthy uptick in my export order book.
Just to confirm, I thought these are G2G orders where rights becomes de facto because you have the government of India financing. So the bids.
Yeah, go ahead. Sorry, go ahead.
So it should be a nomination.
No, in fact, both these orders which we have got, the one order which we have got on Mozambique and one which we have declared L1 in Bangladesh, both are funded by the parent countries. In the Mozambique order, it was funded by the Mozambique government, and in the Bangladesh tender, it has been funded by EIB. Both were competitive global tenders where we were competing with a very aggressive competitor base, and these were all through complete global tender competition. So these are not on the G2G basis. Even on cases where there are line of credit extended on G2G, they are through a tendering process floated by the Exim Bank, where all Indian entities are free to participate. So they are also through a tendering process rather than a nomination process.
Sure, sir. Thank you. I will get back into queue. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Rahul Jain from JM Financials. Please go ahead.
Hi, am I audible?
Yes, go ahead, Rahul.
So, I just started covering the company and I had 2 questions. Are we the preferred consultant, for all rail and transportation for projects in India? And secondly, what percentage of projects going forward, in the transportation and rail side, do you see Rites being a part of, whether that's turnkey or consultancy?
So let me first answer your specific question in terms of the preferred consultant. You see, Rites is now in its 5th decade. We complete 50 years in April, and I can say with full sense of responsibility that we are the only company in India, both in the PSU or the private space, which does consultancy across all areas of infrastructure, except maybe oil and natural gas. So I have 13 different verticals doing consultancy in rail infra, airports, ports, highways, buildings, metro systems, etc., sustainability, city planning. So across all areas of infrastructure, we have been getting orders, and as I mentioned at the outset, this quarter we were proud to become a 1 order a day company. We got 100 plus orders in 92 days. So we continue to get orders through competitive mode, both in the domestic as well as the international sector. The second part of your question was regarding turnkey and consultancy. So we are very clear, we are a consultancy company. We are not a construction company. So whether it is our order book, whether it is our strategy, whether it is our revenue, our aim is that the consultancy revenue from pure project consultancy itself will always be about 50% upwards, and it will continue to grow. Even the export of rolling stock that we do is not just, we are not just a window for a trader. It is primarily consultancy, design, sourcing, as well as customizing the product for the client country. So if you add that, 75% plus of our revenue is aimed at consultancy.
Okay, thank you.
Thank you. Our next question is from the line of Yash Gupta from ThinkSight Advisor. Please go ahead.
Rahul sir, just a small clarification. For FY24, we are saying that the top line will be as same as FY23, and there is a double-digit growth in the net profit. Is my understanding correct?
No, I think you got it wrong. What I was trying to say was that the trends of 9-month YOY we compare, both in terms of top line, EBITDA and the profits, we are aiming to be as close as possible to the 22-23 figures, because there is hardly any contribution, number one, of the export revenue. There is a major hit in the inspection revenue. So while the efforts have been there, as you see, 21% YOY growth in project consultancy, but we will not be able to reach the FY22-23 figures either in terms of the top line or the EBITDA profits. The aim will be to minimize the gap as much as possible. In terms of next FY, these export orders will start generating revenue. The large numbers of consultancy orders which we have been getting, including the most recent quarter, these will start generating revenue. So our aim is that the coming FY, we will build up on the base of 22-23, and that base we will aim to have a double-digit growth in the bottom line, the profits and the EBITDA based on the baseline of 22-23.
Okay, great. Sir, one small thing on the turnkey. Turnkey this quarter is also roughly around 230-240 crores. For FY25, are we expecting some bigger change into this, or we are expecting 250 crores of every quarter in turnkey?
You see, the overall pie, as I mentioned a few minutes back, we are a consultancy company, and the aim will be to maximize first the consultancy and the export revenue. To that extent, we are not a construction company, so turnkey revenue we take in turnkey projects also we take primarily on a very strategic and consultancy kind of model where it is a cost plus turnkey type of model. So that to that extent it will have a certain growth, but in terms of total pie, evened out over a period of few quarters, we would aim to have it in the range of only about 25% net contribution in the overall revenue.
Okay, Thank you, sir.
Thank you. Our next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yes, sir. I would like to know what will be our addressable market size in terms of these rail orders and the road orders announced by in the budget as well as, on the infrastructure side. Like, what percentage would be 5% of the total order size or 2% or how much?
So you see,
Yes.
the announcement yesterday of the large capex push across infrastructure. So we are like very excited about it because we have the advantage that we can leverage this capex across sectors. So whether it is the 3 corridors which have been announced in the rail sector, each one of them we are already have been working and we will continue to leverage, whether it is the mineral cement corridor, whether it is the port connectivity corridor, and whether it is decongesting the high density routes corridor. So we are already doing a lot of surveys and studies and consultancy for semi-high speed corridors for the railways. We have a very strong tunnel, bridge engineering and road over, foot over bridge section, which vertical, which will pitch in for the various, and it has already got a lot of orders in the recent quarters and will continue to leverage that as these corridors move forward. Similarly, across sectors, whether it is the metro sector, there has been a lot of allocation in that. Growth in the airport sector, so we are doing a lot of work in the airports. So across sectors, I see this as a very as a perfect opportunity for us to further leverage and continue this trend of being a one order a day company.
Yes, so what will be the percentage, like, suppose one is to analyze, would be how much of the pie, like, suppose 1 lakh crore is announced in infra package, what will be the right addressable market size? Would be 1%, 2%, how much would be? Just for that, and this my understanding, so.
No, you see the 11 lakh crores is the total capex budget spread across sectors. For each sector, we do different types of work. Somewhere we make the feasibility report, somewhere we make the DPR, somewhere we do the project management consultancy. So to give an overall 1% of the total pie would not be a fair assessment. What is definitely there is that there is each of that allocation across each sector, whether it is in fact the green mobility. We have now recently started a green mobility vertical, the push on EVs and green mobility. Each one of them gives us an opportunity to leverage our vertical strength, and you will definitely see this trend of one order a day stabilizing in the coming quarters moving forward.
Okay, and if I may ask one more question, if I'm allowed, may I, sir?
I think you can come back in the queue, Viraj. There are people waiting.
Okay.
Thank you. Our next question is from the line of Shri Sharsh from an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon. Yeah, go ahead.
Like recently, there was a news article saying that the government is going to invest 1.25 lakh crore to build 200 ropeway projects in 5 years. So I want to know what is the order prospects in this sector, and what is the percentage of the order prospects in this ropeway project for our company?
You see, we can say with pride that we are the oldest and the most accomplished consultants in the ropeway area. Any major iconic ropeway that you see in the country, Rites has been a consultant for it. Whether it is the the Vaishnav Devi ropeway, and across the country there are a large number of ropeways which we have been a part of. Even now we are working on about 9-10 different ropeways, different stages. Some of them are the initial feasibility report, some the project management consultancy. In fact the Katra, the next ropeway from Katra, that also we are already working on. We are working on the Shillong ropeway. So this announcement few days back gives us a lot of opportunity which we will build up upon. Again, to give you one ballpark percentage of the total pie will not be a fair assessment. But yes, because we come into the picture at various stages, right from the initial feasibility, then maybe post feasibility or detailed project report, and then helping the